Trump is back, and so are tariffs. With a 25% tax on Canadian imports on the table, the big question is, how is this going to impact real estate? Will home prices rise? Will Alberta become a migration hotspot? It already is. And could this spark a major shift in Canada's housing market? So stick around because we're breaking it all down. Now, trade wars don't happen in isolation. When tariffs go up, prices follow. In 2018, we saw U.S. tariffs hit Canadian steel, aluminum, lumber, making housing more expensive. And now we're looking at an even bigger trade hit with Trump proposing a massive 25% tariff on Canadian goods. That's not just a tax on companies, it's a potential game changer for homeowners, builders, investors, and renters alike. So what exactly will happen to real estate in Canada, particularly in Ontario, BC, Alberta, and could this create an unexpected opportunity for investors? So let's break it all down. First, let's be clear. Tariffs, they're not just about government politics, they directly impact costs for businesses and for consumers. So a 25% tariff on Canadian goods means higher costs for exports, including cars, appliances, construction materials. These costs just don't stay with the manufacturers, they get passed on to the consumer. So this move is part of Trump's America First policy aiming to bring jobs back to the US, but while it may help American industries, it could send shockwaves through Canada's economy. And let's be honest, probably US economy as well. So higher home prices. If the tariffs apply to building materials like lumber, steel, and aluminum, just like in 2018, expect construction costs to rise, directly impacting the home builders. So new home builds will become more expensive, which could lead to higher sales prices and even indirectly rental rates. We'll get into that in a sec. So renovation costs could go up as well, impacting affordabilities for homeowners looking to upgrade or expand their properties. The big thing is interest rates and inflation pressure. So higher costs mean higher inflation. And if inflation spikes, the Bank of Canada could delay any rate cuts, and worse, maybe pull back on some of those rate cuts that have already happened in the last 9 months. This can put more pressure on buyers and investors. It's going to lead to slower demand in certain markets. Now, Ontario and BC, they already have affordability issues, and adding higher construction costs could make things a lot worse. Now, with many manufacturing jobs at risk in Ontario, we could see higher unemployment impacting housing demand in cities like Toronto and Vancouver, Alberta as well. Will job losses in Ontario drive migration to Alberta? So when jobs disappear in expensive provinces, people look for more affordable alternatives. We've already seen thousands of people leaving Ontario for Alberta just over the past 4 years. And if the tariffs hit Ontario's economy hard enough, we could see even more migration coming westward, soaking up rental supply in Calgary and Edmonton, but mostly Calgary. Lower vacancy rates equals higher rental pricing equals a stronger housing market in Alberta, who's still half the price of Vancouver and Toronto. So will Alberta's economy be shielded? Alberta's economy relies pretty heavily on oil still, which could either protect it or make it vulnerable, depending on how the tariffs are going to play out. So if the US slaps tariffs on Canadian oil, Alberta could take a hit, but there's a strong case against this happening. US refineries need Canadian heavy crude, so a tariff would hurt them just as much as it would hurt us. Now, if oil prices remain stable or even rise due to geopolitical factors, Alberta could be the province that benefits the most from this entire situation. So here's a couple of scenarios for you. Scenario 1, no oil tariff. Alberta booms. If the 25% tariff hits manufacturing but not oil, Alberta could see a huge influx of people looking for work, further boosting housing demand. Rental vacancies could drop, pushing rents higher, while more buyers enter the market to take advantage of relatively affordable home prices compared to Ontario and to BC. Now, investors looking for rental properties might see Alberta as a prime market to enter. They already have. The past 4 years is just a testament to that. So scenario 2, oil gets tariffed, Alberta faces headwinds. If oil is included in the tariffs, Alberta's economy could struggle as its main export faces higher costs. This could lead to a temporary slowdown in housing demand, particularly in the higher end markets. However, given the high demand for Alberta's oil in the US, any negative impact might be short-lived. Ottawa and some provincial governments, let's say Ontario and BC, are reportedly preparing a pandemic-style stimulus, here we go again, response to tariffs if they should take effect. So this could mean helicopter money, business subsidies, or direct payouts to Canadians, adding more fuel to inflation. Liberals just love to spend that money. The Bank of Canada may cut interest rates further to counteract economic slowdown. So which way is it going to go, up or down? But that could push inflation higher further, complicating real estate affordability. So is Trump's 25% tariff going to crash the real estate market? The short answer is probably not, but it could create some major shifts in affordability, migration patterns, and investment opportunities, or force that migration higher. So Ontario and BC probably going to see a slowdown, while Alberta might actually gain from the economic shakeup, especially if oil is left alone. And I think that's where we're going. So what do you think? Is real estate going to go up? Is real estate going to crash? Please provide your comments below. Hey, and don't forget to like and subscribe. Thanks for watching this far, and we'll see you in the next video.